Hi to IPO subscribers. Welcome to eaglelive.ea. Today, let us review IPO from AUGMONT Enterprises Limited. Here we go on IPO presentation. This is the financial analysis of the company generated by AI powered software. And as you know, the fundamentals of the company is very important before subscribing any IPO. And based on the information given to the IPO or metrics given to the IPO, this company has been categorized as a healthy company. So let us see what are the financial strengths that made the company a healthy company. First, health analysis, solvency. Solvency ensures the sustainability of the company. As the company will stand level, I mean, get it close. So all the metrics are positive. Good. So solvency is strong. So sustainability is assured. Coming to liquidity. Liquidity ensures survival of the company. Here, both current ratio and quick ratio both are very strong. So liquidity is very strong. Coming to our operational efficiency, only inventory turnover. So inventory turnover is very high. So that means they have some working capital problem. So next is gross margin. All other metrics are positive. Okay, very good. And financial irregularities are safe. Financial frauds, no frauds have been identified. Profitability, EBITDA 482.21, EBIT 474.95, PBT 473.1, PAT 348.63, cash profit 355.89, EPS 40.45. Wow, very good. So EBITDA margin is 0.51%. 0.51. Net profit 0.37. Oh, ROC is 40.27. ROE is 51.04. Very low rate. EBITDA margin 0.51. Net profit margin 0.37. Oh. And coming to cash flows, minus for cash flows from operating activity minus 42.16. Net cash flow for the year is 86.72. So market price 788 is the cap price of the IPO issue. So based on the 788 of cap price earning ratio is coming to 19.48. Okay, within the 25, with the benchmark of 25. And coming to price to book value, it is 7.05. It's above the required ratio of 3. So it is a negative, I should say. And coming to growth indicators, all the metrics are positive. So this is the financial analysis and financial status of the company, and the company is considered to be a healthy company. And now let us go on IPO review. Yeah, this is the IPO review. AUGMONT Enterprise Limited, integrated gold and silver platform operating across procurement, refining, bullion trading, digital gold, jewelry manufacturing, and international sales. Very good. B2B plus B2C model. AUGMONT spot bullion trading and delivery platform for enterprise. AUGMONT gold for all, digital gold, silver, and consumer focused offerings. Presence across 24 states with 5,223 registered enterprise members. More than 49.62 million registered digital gold consumers as per the information provided. Strong technical enabled ecosystem connecting traditional bullion markets with digital consumers. The company has reported a very large revenue scale, reflecting the high transactions value inherent in the precious metal business. IPO snapshot. IPO is 825 crores. Fresh issue 620 crores. Offer per sale 205. Price band 750 to 788. IPO opens on August 21st and IPO closes on August 25th. Post-issue valuation, approximately 7,200 crores at the upper price band. Okay, good. Valuation, key investor focus, PE 19.48, reasonable valuation based on earnings. Projected PE 17.53. Okay, looks attractive. The high earnings growth is sustainable. PB is 7.09, expensive compared with the book value. Projected PB is 6.39, still expensive even after projected growth. Valuation message. reasonably valued on earnings but expensive on book value. The IPO is not a deep value opportunity. The valuation depends heavily on arguments sustaining strong earnings growth while improving its cash flow profile. Key investor concerns. Negative operating cash flows in the past, high working capital and inventory requirements, related party transaction concerns, legal and regulatory proceedings, potential underutilization of manufacturing refining facilities, competitive precious metals in market, significant fresh IPO proceeds are intended for working capital and inventory requirement rather than primary for capacity expansion. Even working capital usage also very good. Company can have additional revenue. So the key question for investors is, are reported profit converting into sustainable cash flows? Why this question arises? Because of negative operating cash flows. Where that money is going? What are the profits they are earning? Where that money is going? That is the question. There were negative operating cash flow in the past. This creates the key investor concern. Are reported profits actually converting into cash from the old funds? Not converting into profit, they call cash, but cash is being used for some others. So negative cash flow, operating cash flows means it's a negative points, and one is it's a concern one. So it is a serious concern. So market sentiment, current sentiment positive, but valuation sensitive. Argument enters the market during a period of strong IPO activity and investor appetite. So recent market commentary has reported a grave market premium for argument, indicating positive pre-listing of expectations. Although GMP is unofficial and can change quickly. The company's gold market exposure, digital consumer base, and growth profile are likely to attract investor attention. However, high PB and cash flows concerns could be moderate institutional enthusiasm. Overall investor view, business strong, growth potential high, PE valuation reasonable, PB valuation expensive, cash flow concern, governance risks needs monitoring, and market sentiment positive. Final verdict, strong business but not a cheap IPO. Augment enterprise offers strong business scale and growth potential, but investors are paying a premium valuation. In case you are prepared for that, of course, it is up to you. Substrate, cautious, moderate, attractiveness. Growth investors may consider with a long-term view. Conservative value investors better to wait for more attractive valuation or stronger cash flow evidence. One line video conclusion. Argument has the scale and growth story, but at 7 book value, there is a price to book value. The real question is whether the future growth justifies the premium valuation. That is very important because price to book value means so the company must be in a position to increase the book value. So with additional profits. As always, investment decision should be based on your own financial goals and risk tolerance. Thank you for watching. Thank you very much. If you found this analysis useful, please like the video, subscribe to the channel, and stay connected for more detailed IPO and stock market research. Thank you very much.